So as far as the lines go, you can kind of, for the most part, just ignore any lines that are way outside of the range and just focus on the ones that are like maybe 2 lines above it and maybe like the few, maybe the bundle of lines below it. And then what you do with lines, and this will help you with your trading, a really awesome, way to look at lines. I'm going to leave those there for a second. Okay, so a really nice way to look at lines. This is what I'm talking about when I say you may save some charts that you're building setups for, right? You could say, I'm on a couple exchanges, and this is kind of true, right? I'm like, let's say I'm on Femex and I'm on Bybit. Maybe I'm also on BingX. I look at that larger scale, monitor, and I go, you know what? I do think I'm really more bullish on Bitcoin, and I could even see it going to like 80,000 or something, right? I'll leave this where those drawings are. But I could see it really going up. That's my bigger picture belief, is that we're going to go up. But being a trader and not really being, a person that cares that much about either direction, I like the idea of, seeing if I can nail a short. And so I'm not going to place my order. I want to see what the data shows me when we get there. But I know that that line right there, almost exactly, is a great opportunity to find a short. And almost doesn't matter what the market's doing. If I have a risk reward ratio that I'm happy with, like this one, almost 10 units of reward per unit of risk. That's a great one. Even if conditions are, pretty good and bullish, that's still not a bad short, right? I can risk 1% to try to make 10% if it goes all the way down there. But then I have to kind of ask myself, is that realistic? It's probably not. I can see where it's been trading. It could be, but maybe like as a conservative, I would go here because I know it's going to run into some support because I have, a bundle of pressure lines there. And so now I ask myself kind of the same thing. Let me delete those. So yeah, now I ask myself the same thing, and I just go, could I put something together where I'm willing to risk for this 6 units of reward per unit of risk? That's not bad, but I just wouldn't want to place like a 10x or a 20x leverage trade behind it. That's more like, let me get some decent capital together and do something like a 2x or a 3x, because that's going to magnify this 99 so that I maybe lose, if I'm wrong, 3% of my money. But at the same time, it'll magnify this here too. And so if I'm right, I'll make somewhere between 12 and 18%. So now that's still the same division here, right? 6 units of reward per unit of risk. But now it's just, do I feel good about risking 3%, which I could easily lose because we're technically in a bull market. We can all agree, right? Here's the longer term daily 200 moving average. That's what the ribbons are. They're the 200 simple moving average of whatever time frame we're looking at. And that's why I have the ribbons on there. They are usually just as dangerous or powerful as pressure lines. So they're kind of far away in this case, but being that we're operating above them, and you can see how bullish this thing is altogether, we're clearly in a bull market. So shorting is technically going against the trend. But if you were going to short, this is just saying, I think I'm open to doing maybe a 2x or a 3x leverage because I like the asymmetry found in this particular calculator. And then maybe my real position, is the one that I think we could go up. I don't want to get too crazy, but I think, we could easily go to, let's say, 76. And so in that, because of that, I think I could, if we get a moment of down pressure, do I think these support lines would stop it? I could set this kind of trade up in advance. And then this is powerful because it's almost 11% if I'm successful, if it goes to literally 77, or I'm sorry, no, if it goes to 76. If I lose, I'm losing 1.41% organically. And then the number I'm looking for here is just generally on low leverage. If I can get a 6 or better, I'm pretty happy. 7, 8, even better if it's realistic. And here is nice because I have an entry and I have 3 different pressure lines kind of giving me a logic for why that price will have at least a hard time dropping below. So even if it fall below, chances are it would come down, come up. I'd probably be able to protect my trade, set my stop loss a bit higher. And if it keeps going, then great, my position would expand, as I had hoped. But even if it comes back down and I'm wrong, by that time, I've already protected my position right around this level. And so it's one of those things where you either make pennies or make dollars, but you don't lose. And so that's how I look at that one, right? So